Welcome, everybody. We're going to kick off the Innovation Forum here at Innovation Zero. Sorry, the Finance Forum here at Innovation Zero. So I'd like to welcome you to Innovation Zero. This is the inaugural event, and I think you'll agree when we look at the numbers and those trying to squeeze in here and the other parts of the venue, it's got off to a flying start. Endorsed by the Prime Minister. I just saw the Deputy Prime Minister heading for the main stage. So some pretty incredible, I think, support and endorsement. And I think it's no surprise when you see the issue of climate change, climate risk, the impacts of climate change, and the race to net zero going up the agenda as it is, that we're seeing this huge interest. And also, I was at an event yesterday in the City of London where I heard a senior official from the UK government say that in the UK, we have recently mobilised, we've now mobilised something like 50 billion. We probably, in the UK, through the City of London, and we've reached our first trillion in terms of green finance. So that all sounds pretty good. And in many respects, you know, we could pat ourselves on the back. I've been working in this space, and it's quite scary, actually. I almost don't want to admit it, for 30 years. And I think for many of us dinosaurs that have been working in this space, you know, increasingly I'm nervous at the rebuttal. Well, if you guys have been doing such a good job, why are we not closer to where we need to be? And there's probably some truth in that. I've worked as a climate lawyer for over 20 years in the City of London, around the world. I was the CEO for 5 years of the Carbon Tracker initiative. And for the last 4 years, I have been working at the World Economic Forum, basically driving a whole program around industrial decarbonisation, the Mission Possible Partnership, the First Movers Coalition, and now working on an initiative, Gaia, to scale global philanthropy to catalyse the public-private action that we need to see. I'm also the co-chair of the Carbon Tracker Advisory Board, and I've sat for over 10 years on the Climate Bonds Initiative Advisory Board. So we've got a great series of panels. We're going to look at infrastructure. We're going to look at corporate investing, venture capital, private equity. But before we get in to all of that and we hear from our excellent speakers and panelists, I just want to take a few minutes maybe to put things into context. One of the things I'm going to be listening for is, how does this all add up to the speed and scale we need to see? Because even with all the momentum that we have, we still know that we are nowhere near where we need to be. You know, if we look at this, we're already up against at least 4 of the world's 6 critical boundaries. And we show no sign of slowing down in sort of putting pressure on those boundaries, which at the end of the day, we, as a planet, as a civilization, as a species, we depend upon staying within those boundaries. And again, whilst we're seeing lots of momentum and action, we also see the curves are still not going in the right direction. If we look at where we need to be by 2050 across nature, climate, and equity, we need to mobilize across all sectors over $100+ trillion. That's approximately $3 trillion a year between now and 2050 across nature and climate. And of course, I mean, those estimates vary. Could be a lot more, could be a lot less. But whatever the number is, I wouldn't get too hung up on the specific number. You know, it's still a significant lift from where we already are. And if we're going to get to net zero in 30 years, we require 2 transformational changes. We have got to ramp down the existing high carbon assets, even those that under normal circumstances might continue to operate for 30, 40, 50 years. We will have to wind those down early. We will also have to scale up low carbon assets. In a sense, I was at a talk with Bloomberg Sustainable Finance yesterday. and they were talking about this sort of investment ratio, the investment in each company between clean energy versus high carbon fossil fuels. And looking at that ratio across companies is a critical indicator of how quickly those companies are changing. They are trying to transition. So let's just look at the numbers on the ground, because I think we talk about big numbers like 3 trillion a year, 100 trillion, we show curves and all the rest of it. But what does that mean in practice? Well, one of the things that I was working on over the last 3 years, the Mission Possible Partnership, we worked with McKinsey and Systemic to build these sector transition pathways. And we work with the most ambitious companies in all of these sectors: aviation, cement, concrete, steel, trucking, shipping, etc. And they backed these net zero high ambition pathways. If we're to be on track across these 7 sectors for net zero, then by 2030, we have to have over 300 sustainable aviation fuel plants up and running. That's 40 million tons of SAF in production by 2030. We have to have 200 ships using zero emissions fuels, reducing 35 million tons of zero emissions. We have to have, that's 35 million tons of zero emissions shipping fuel. In trucking, we have to have 7 million zero emissions trucks on the road by 2030, less than 7 years. Steel, we have to have 100 near zero emission steel plants in operation, producing over 200 million tons of green steel. We have 1 pilot at the moment in 2023. We have to have 60 zero emissions ammonia plants, producing 40 million tons of green ammonia, 40 new low carbon refineries and smelters in the aluminium sector, and over 20 plus commercial scale CCUS plants for the cement and concrete sector. I think anyone who's done any M&A, project finance, any kind of investment or deal doing, you look at that and you think, how the hell would we produce a pipeline of projects? In a sense, we'd have to do what Ford did for manufacturing to deal doing and financing. We'd have to be able to produce an industrial scale conveyor belt of infrastructure and assets and financing. How do you build such a system? And just to sort of put that in context in terms of the energy transition, this is the amount of infrastructure that would have to sit behind those industrial and heavy mobility facilities in terms of renewable electricity, hydrogen, carbon capture, sustainable biomass. But the good news, of course, as we know, and this is taken from my good friend Kingsmill Bond's blog on the RMI website, which I would read, which is the energy transition in 4 graphs. Highly recommend reading that blog. You can see we're on the S-curve. It is taking off. But of course, if this was 10 years ago, we could probably let it run and work organically like that. But it's going to need a push to deliver the numbers we've seen on the previous slides. But we are on the way. We also have to recognize the transition. It's not a substitution. I mean, it is a change. It's a transformation of technologies, which is why some companies who know how to do one thing in terms of commodities may not always be the best companies to do the new type of technology and approach, and why some companies might be struggling with the transition. And I think beware of the Kodak moment in incumbent industries. And I'm going to finish on this slide and just think about yesterday's Shell AGM. I'm sure most people have read about this. Shell is pulling back on its targets because it's now making so much money out of oil and gas, as are the other fossil fuel companies. But so did Kodak in terms of its traditional cameras just before it didn't, as this graph shows. And just when digital technology was taking off exponentially, as we've seen with those clean energy technology graphs a moment ago. So on that note, thank you. That's what I'm going to be looking out for as we listen to the speakers and panels over the rest of this session. How does it all add up to rewiring the financial system to deliver those flows, that 3 trillion a year, and the speed and scale we need to see?